Show on the road, girls. Okay, and let me get it streaming into Facebook. I hope all of you those of you who are on here who I don't know, I would love to connect with you further on social media. So I'm on all channels under Kathy Alessandra. So I would love to love it if you would request to connect over there. And it's just loading and thinking. It's over there. Now I know to turn the speaker off on that. Okay. Hi, everybody. Welcome back. It is Kathy Alessandra. We are here with Success Summit 2022. And this is an all-day conference spotlighting some amazing women, some areas of brilliance and expertise that they are sharing with you. So as you may know, I am the publisher of Yes, I Can Living magazine and also Yes, I Can Women, which is a brand new magazine that'll be coming out in March, spotlighting women of extraordinary, well, they're amazing women doing extraordinary things. So this Success Summit is really spotlighting our featured experts at Yes, I Can Living. So as an expert, yes, they write articles every single week for the online magazine. So if you really resonate with them, you've gotten some great tips with them. So far, we've had Janice on brand, we've had Elisa on fashion, we've had Catherine on finance, now we're having Candy. But you can connect with them further over on the website and you can read their articles. I typically post them on the page here, so be sure to check that out. So right now we're going to be talking about mistakes that business owners make, common mistakes that business owners make. And Candy Messer is going to be our guest for this. Our Success Summit is being streamed live here on Facebook, but it is coming through Zoom. So those who have registered at success-summit.com can get the Zoom link and you can come on over and ask questions when we finish each one of the sessions. We don't take questions here on Facebook. That's just saved for those who've actually taken the time to register. So let's get started with Candy, which is our 12 noon training. Candy is a profitability and growth advisor working with entrepreneurs in service-based industries to help them have successful businesses. With more than 22 years of experience in the industry, Candy understands the stresses business owners face and offers customized services to meet their varying needs. She started Affordable Bookkeeping and Payroll with the goal of providing businesses with top-notch bookkeeping and payroll services at a reasonable price. Her company energizes business owners by removing the burden of compliance tasks, as well as working with them to identify issues preventing higher profitability and/or growth. And as a result of using her services, clients have peace of mind and a freedom to do what they love. So Candy, welcome. I'm excited to have you here and be learning more, as we all need to learn more about, common mistakes that business owners make that really can get us into some hot water when it comes to finances and reporting and deadlines in the state and the country and all that kind of stuff. So I'm going to go ahead and start the interview here. So you wrote a chapter in the book called Business Success with Ease on mistakes business owners make and how to avoid them. What are some of the common mistakes that we're talking about here that entrepreneurs tend to make?
Right. So in that chapter, I actually talked about 10 different mistakes, and I was limited by space too. As you know, when you write a chapter, you have so many words. So there probably could have been even more than 10. But today I'm going to focus on mainly 4, assuming we have time to talk about those. And the first one is people not getting the proper licenses or permits. The second one is going to be not calculating or paying their sales tax properly. Third one, not filing their paperwork on time or making those payments. Maybe they file but don't pay everything on time. And the fourth, we're going to talk about 1099s. Those are due at the end of this month. So it's very timely that we talk about that.
Yes, it is. Hard to believe it's time to be filing those. I've heard from a few people about that. So let's start with getting the proper licenses and permits in place. And what are some of the items that entrepreneurs need?
Sure. The first thing I want to talk about is actually a city business license. And that can be different times of the year that it's due. Now, many require it in usually January or February of the new year, but I have some clients that they have to pay it twice a year, and it's like in strange months, you know, in terms of not necessarily matching the calendar. There's sometimes it's due in April and October, or, you know, sometimes it could be due. I have one particular license that's due in August for a client. So you can't just assume it's at the beginning of the year. And the other thing that I want to talk about in terms of business licenses as well is that you may need to have more than one. So a lot of people think it's just in the city where their office is located. So if they have, and nowadays, right, we have home offices. So that brings up a whole nother thing too, is you may need a home office permit as well as a regular business license. But if you are working in another city other than your own, you may need a business license to operate in that city as well. It just kind of depends, but like obviously things that come to mind that it's more reasonable to expect it is like construction, right? If someone's going to build a home in another city, it's different than their own. Of course, they have to have a permit to operate in that city too. But you really have to look based on what you're doing and where your customer is located if you need to have a license in that city besides your own. And I wanted to make sure that people understand the difference between a DBA, which is doing business as or fictitious business name, and a business license. They're two totally different things. One is from your county and one is from the city. So I had someone who came to me once as a new client, and I was asking her these questions, you know, do you have your business license? And she said, well, I don't need that because I have a DBA. And I had to explain the difference. And so having a DBA is, if the business is not in your name, you know, like Candy Messer, my business is Affordable Bookkeeping and Payroll. When I first started, I had to have a DBA because you don't exist in the eyes of the government if you're operating with a name that has not been registered. Once you become an entity, so for instance, I'm a corporation now, I exist in the eyes of those organizations. I have an EIN that matches my name. But if you are operating under a name that you have not registered, technically you don't exist, right? And it can cause problems when someone issues that 1099 to you under a tax ID and they can't find you. So that was one of the things that's really important to understand as well. If you're not using your legal name and you're not an entity, make sure that you do have that DBA. I want to talk about sales tax permits too. A lot of people who are on here, it sounds like are maybe more service-based businesses. So maybe sales tax doesn't apply, but in case there's anyone who is technically subject, and this can get a little confusing as well, because a lot of times we think, oh, I provide a service, it's not taxable. That's not always the case. And so you have to be careful of if your product or service is taxable or not, and you have to look into the locations where you sell. Another thing that has brought some complications is in 2018, there was a case in the Supreme Court called South Dakota versus Wayfair. I'm not sure if anyone on here has heard of that yet, but that changed the regulations, meaning in the past, if you didn't have a physical presence in the state, you did not have to collect sales tax. And you would just put on your own, like say we're in California, if you had a California return, you would say I had out-of-state taxes, you didn't collect, it wasn't taxable to California, and it wasn't taxable in the state you sold to either. The Supreme Court changed that with this case by saying if you have economic nexus, even if you don't have physical nexus, you now could be required to collect tax. So if you're selling in 50 states, you could potentially actually have to collect in 50 states. Every state has their own threshold, and there's either a dollar amount or a certain number of transactions. But if you fall into those categories, you may need to collect tax in other states besides the one that you're operating in your home state. So we can cover that. I'll cover that a little bit more detail even in a few minutes, but that one I wanted to make sure you're completely aware of that requirement, because a lot of people are getting themselves into hot water by not registering in those states. And then finally, in terms of what you need to do with licenses and permits is making sure that for your industry, you're meeting all of the requirements as well. So not only a business license, maybe a DBA, but for instance, a restaurant would need to have a liquor license, their fire alarm permit, health permits. So there are other things in industries that maybe aren't as obvious. And you have to check again with your city, your county, your state to make sure that you're meeting all of those requirements. And as I mentioned earlier, if you are operating a business from your residence, you may need a home operating permit. Not every city requires this, but some of them do. And we want to make sure, again, that you're in complete compliance when it comes to those issues. And to avoid these mistakes, there's so much that you would have to keep track of, right? You know, when is my business license due? When is my sales tax, due? When are all of these different things due? So the first thing is obviously check with your city, your county, your state in terms of those due dates, and then start using whatever method is going to work for you, whether it's a written calendar, if it's in your phone on a calendar, if you have a project management where you can put your tasks and you can put recurring tasks. So when you mark it as complete, it auto, populates again for the next period when it's due, to help you keep that in mind, because we all think, oh, I'm going to remember that. And then we get busy, right? Things come up and then you get that notice and then you get that, oh, I knew that. Why did I forget it? And you've got this penalty, right? So we want to make sure we're avoiding those penalties and fees. And so whatever works for you, everyone has a different method that works, but there are different things that you could be doing to remind you. Now,
Mine
again,
is always is always that statement of information. I always, for the LLC, always forget that one. But
and you know what the government says on this too? They'll say that all this, like, oh, we'll send you a reminder, right? Whether that's an email reminder or, that statement of information, they send you the green postcard, right? But they say failure to receive that does not excuse you from not having filed on time. So you can't say, oh, well, I didn't know because I didn't get that reminder. Well, tough luck. They say it's your responsibility to know when your forms are due. And sorry, we do this as a favor to remind you, but it's not required.
Yeah.
Right. So that's why it's really important. Don't just depend on your memory, because something's going to come up and you're going to forget to, keep track of all of these different dates, because they're not all at the same time. A DBA can be good generally for up to 5 years. Again, it depends on the county, but most of the time it's up to 5 years. Business license usually have to be renewed once or twice a year. And then annual permits often are, again, those that are industry specific, usually, again, like fire alarm permits or things like that.
Mm-hmm. Okay. All right. Good to know. Lots to consider here. So I know sales tax has become super complicated in recent years. Can you discuss what business owners need to know about collecting and remitting tax?
Right. So again, kind of going back to what I talked about in that Supreme Court case too, in recent years, it's become more complicated just in terms of the fact that you may have to be tracking and collecting for multiple states. But not only is that the complication, but you also have to know what's considered taxable or not taxable in these different states. And each state has different rules. And so a lot of people, again, assume services are not taxable, right? Like the service, I'm in bookkeeping and payroll, that's not taxable. Well, in California right now, that's not taxable, right? There actually was talk a few years ago of making those services taxable. And so you have to check into every state again that you're providing a service to see if you really are exempt or not. And just as an example, like I have a client that has a very labor intensive type of services, but the state says that 20% of that labor is taxable and 80% is not. And you're like, well, wouldn't it be just 100% or not? But it's not. They actually tax 20% of that because it's going into goods and services. And so in the long run, it becomes a tangible product. So although it's really still labor, they are taxing some of that labor. So some of the things that could be taxable that sometimes are not thought of is a graphic artist. Again, if you're creating a logo, you might think, well, I'm sending it to them digitally, but if that's going to be put into like a flyer that's printed, that could be taxable, again, depending on the state. If you are doing photography, and in some states, if you do digital, it's not. If you do print, it is. But again, you have to kind of check with the states. Food and beverages can get really confusing too. I don't know if we have anyone on today that does any of those type of items, but a lot of times we think, well, if you go to the grocery store and you buy certain things, it's not taxable, so it shouldn't be taxable when you're selling it. That's not always the case. Cold food often is not taxable, but if you're at a location that 80% in California, the rule is if you have 80% of what you're selling is considered food, and their definition of food is actually not all food, soda and alcohol is included in that. If 80% of what you sell is food and 80% of that is taxable, then everything you sell is taxable. So if you sell a milkshake that should be cold and not taxable, now it's taxable, right? So that's why if you go to McDonald's or wherever you're going, pretty much anything that you're buying is taxable, even if under other rules and regulations, it wouldn't be. And some states even tax on the ingredient. Like if it has wheat, it might be taxable, but if it doesn't have wheat, it's not. Right. So it's just really, really complicated. And
Wow.
so people can end up with huge penalties because they didn't follow the guidelines of the states that they're selling in, because they made assumptions on what they think is taxable or not taxable, which is why I really wanted to focus on this today too, because again, we might think that everything that we're doing is not taxable, but that may not be the case, especially with the new regulations since 2018. If you're providing a service in other states, you may have to collect and remit tax. And another thing about tax that sometimes is confusing is that generally you are supposed to be taxing at the rate where your customer receives their merchandise or the product. So a lot of people tax at their rate. That's okay if you are a brick and mortar, or if someone is coming to you to pick up the product, then you can tax at that rate. But if you're shipping it out to them, you are supposed to be tracking that location. And those locations can have all different tax rates too. If you even just think of LA County, we have an LA County tax, but then there's a bunch of cities that have higher tax. We have Lawndale has a higher tax, Culver City, Santa Monica, Southgate, so it's not just the county even, and even just in California, there's so many different counties at different rates. It's really hard to keep track. But the cities now, they're passing legislation. So when you see that thing that says, oh, it's a quarter of a penny, when you pass this tax, it's a quarter of a penny, that's a 0.25%, right? Your sales tax goes up. And you have to really be careful to make sure you're taxing properly and remitting properly, because again, if you're audited and you're not taxing properly, you can end up with a big tax bill. And so
is this the kind of thing that you work with, somebody such as yourself, a bookkeeper, accounting service? I mean, are they the ones, somebody like you, somebody who's able to know these things, be able to tell a business what they need to be doing, or what's, yeah.
It's getting more and more complicated, to be honest. So I know a lot of the California ones too, and we know when things are changing, right? And when something passes in November of a year, right? When you vote in November, it usually doesn't take effect for about 6 months, right? But I know I need to go to the CDTFA site every quarter and see what tax rates have changed. And literally every quarter, there are changes somewhere. Now that we've got all these different states, it's getting more and more complicated to keep track of all of those. And so there is a software that you can buy. It's not inexpensive though. So you need to make sure that you're having a decent amount of transactions to make it worth spending on that. But you can connect that software with your accounting software, and it will look at the zip code, and then it will calculate the tax. And they are supposed to keep that up to date with every change, right? Hoping that, you're staying compliant. But sales tax is becoming more and more complicated, again, with all the different states now saying, yes, I want to make sure that we are getting what we're supposed to, and we're going to require you to collect. Now, not every state is the same again, but a lot of the states had set a threshold of $100,000 or 200 transactions. So a lot of us probably aren't going to hit those in many states. But it's, again, important to check in the states that you are selling into to find out what their thresholds are, because they could be lower.
I imagine too, these days with everything that's happened over the last couple of years, people are selling products, services, whatever, like you're talking about, over a bigger, wider area, because we've gone so much via Zoom and all that. So something seriously to think about. So.
Right. With the shutdown that happened, right? A lot of people couldn't really be operating their businesses very easily. Even if they could technically still be open, people were afraid to even go out and go shopping, and they were quarantining or things. So what happened? Online sales, right? That's what you had to start doing, was shifting everything to online. Now you have a big market because people can just search you on Google, find you, order. So that's where it's starting to get more and more complicated. That's why the states are really saying we want to make sure that we're getting what we are due, because every state is hurting for money too, right? So where can they get it? Sales tax, right? There's other things, but that's one of the easier places that they can easily collect. And they not only were saying from this period on forward, they actually can go back and say, you should have been collecting back to 2018 and owe all this additional tax. They actually had some where you could basically say, oops, I made a mistake, and you could pay like a partial. They let you like discount part of it just to get on track and then going forward. But if you didn't do that by a certain date, and if they audit you, they can go back and charge you. So it's really important, at least to start now. If you are supposed to be collecting tax in those states, make sure you register and remit on time.
Okay. All right, good to know. So speaking of on time, there's a lot of paperwork that we as entrepreneurs need to file. And I know, even I mentioned my statement of information for my LLC that I forget about. Can you share with us some of the things that need to be filed that we really need to have at the top of our mind?
Sure. That's a really good one that you brought up that I don't think I was even planning on mentioning, but yes, statement of information. If you are an entity, you either have to file every year or every other year saying nothing has changed. Even if nothing has changed, you still have to say nothing has changed. You have to pay that fee. In California, it's like $20 or $25, depending on your entity. But if you don't do it on time, it's a $250 penalty, right? And so that could be painful. So making sure, again, when you have to file, because that's one of the ones that they specifically say, just because you didn't get the card and you didn't know, too bad. Here's the penalty. And it's a painful penalty, right? When you could have paid $20 or $25 and now it's $250. Right. So one of the other things a lot of times people don't know they should be making are those estimated tax payments. That is, you're paying your tax in throughout the year. Obviously, when you're on payroll and you have a paycheck, processed for you, taxes come out of the paycheck. When you are your own boss, and if you're not on payroll at all, you're not paying anything in throughout the year, but you are supposed to. So those are due January, April, June, and September. And it's kind of weird because you would think it would just be every 3 months, but that's not what they do. It's, from January to April is 3, but April to June is only 2. Then you go June to September 3, and then September to January 4. Doesn't really make a lot of sense.
So really, again, does anything in the federal government make sense?
Right. That's why it's really helpful. Again, put it on a calendar or something, because if you think it's every quarter, you're not going to be paying a couple of those on time. So if you don't make these estimated tax payments, and if you owe, more than a specific number, usually it's about $1,000 in tax, but that could, change because laws change all the time. And I'm not a CPA. So I always say, talk to your CPA to get these numbers for you. But if you do not pay throughout the year, you will end up with penalties for failure to file on time and to pay those taxes on time. It's really just a coupon that you send in with a check, or you could pay electronically. But again, they could say you were supposed to have paid April 15th and you didn't pay until the next April 15th when you filed your tax return. So you didn't pay for a year. So that's,
and I think
that's another painful.
Yeah, January payment is the previous year's, right?
Right. It's the final payment for the previous year. So for 2021, your estimated tax payment is due January 15th. Of course, if a due date falls on a weekend or a holiday, then it goes to the next business, day. But for this year, January 15th.
Okay. All right. Other paperwork.
Yes. So one of the other things is, again, if you are an entity at all, you should be on payroll yourself, even if you have no other employees, because you're supposed to pay yourself what's considered reasonable compensation. And if you have other employees, of course, you're supposed to be paying them at least generally twice a month. And as I mentioned earlier, you pull taxes from their paychecks, right? And so those have to be remitted. And depending on how much tax you collect determines your schedule. So most people that are, smaller businesses are a monthly tax depositor. When you get to be a little bit bigger, you have to pay every single time you run a payroll. There are a few that can pay quarterly, and even a very small minor number of people that actually can pay annually. But generally, you should be paying your tax every month. And then you have your quarterly reports. So what happens is sometimes you are changed from one schedule to the next. So for instance, if you had a very small payroll and you used to be quarterly, and now all of a sudden you've gone over that threshold, but you don't realize what that threshold is and you're supposed to pay monthly, now you have penalties. And it's the same schedule generally for the IRS and your state. So if you missed changing it for the federal government, you also missed for the state, and then you've got 2 penalties now. So payroll taxes and paying those on time, and then filing those quarterly reports on time is imperative. Obviously, we talked about business licenses earlier. That's another thing that sometimes people just forget, or they don't calculate things properly. And if you don't calculate things properly, you can also have a penalty for failure to file on time. Not that you didn't file necessarily, but if you don't even pay in full, they can penalize you for the difference, right? So it's not like, oops, you made a math error, that's okay, right? It's like, well, you short paid by $100, now you owe that $100 plus, taxes and penalties. Generally, penalties usually start around 10%. Payroll is a little bit different. If you pay within 2 to 5 days, it starts at 2%. But most penalties are 10% plus interest until it's paid. So depending on how much you owe, that can be a little bit of change, that you have to pay towards that. And again, my goal is to really help you avoid those penalties and interest, because nobody wants to see that, having to come out of your pay. We want that to go towards other things in your business, right? Use the money for growth or other things you need for purchases, and not paying penalties, especially because those are not tax deductible. You want to, avoid those at all costs. Sales tax. You were going to say something? I was just going to say sales tax too. It could be, a lot of times people think, oh, I just have to pay quarterly. That's not always the case either. Some states you have to file and pay monthly. Nevada is one of those. We have a client that's in Nevada. You actually file an actual return and pay every month. In California, a lot of businesses are what are quarterly filers, but they are monthly prepay accounts. And California is kind of strange on this too. So it's not even the end of the month when you have to pay the 24th for those 2 prepayments. And then there's 1 per year. And it's because California is on a fiscal year where their calendar ends in June, that they make you pay extra tax by June 24th. So they get extra money. So the amount that you normally would pay for June tax in July, you have to prepay part of that in June. And a lot of people miss that, and they end up with penalties again. So it's, again, really important to know all of these different kind of quirky things that aren't just typical either, and knowing when you have to pay. And some businesses get switched again from, they used to just be quarterly filers to now they have to be monthly. I just had another client that sent us a notice that says, what does this mean? Well, it means they want you to pay the tax every month now instead of waiting for the quarter. And they don't like that, but there's nothing. And I always get the question, is there anything I can do to avoid doing this? I'm sorry, but there's no way, because the amount of tax you collect in the quarter put you over a threshold that now switched you to a monthly pay. So unless in the next year in the look back period, your sales end up dropping where you're not taxing as much, then maybe they'll switch you back. But other than that, you have to pay that. And I wanted to point out too, that sometimes they'll say you're a quarterly filer, but it's not a calendar quarter. So, in our minds, we're like January, February, March, that's the first quarter. Then you file in April. A lot of states, that's what it is. New York is an example where they don't follow, they still say you're quarterly, but for example, when you are filing, you actually have December, January, and February together, and then you pay in March, right? So it's even over 2 different years is a quarter, which is very strange. But so it's, again, really important when you find out how often you pay, really look at those due dates and don't assume, because assuming something could be painful, right? When you get those notices.
Very painful, very painful.
Yes.
Oh my gosh. All right.
Yep.
Well, speaking about painful, let's talk about the 1099s, which are
Right.
painfully due here, pretty quick here.
Yes.
And I know that there's some rules about who gets 1099s and how you have to send them, and then deadlines and all that.
Yes.
And I imagine many of the entrepreneurs who are on our Zoom participation here or we're listening on Facebook may need to be sending out a 1099. So can you talk about that a little bit?
Yes, this was one of the most important things I want to talk about today, because some of the things I talked about maybe don't apply to some of the people that are listening right now. Like I said, sales tax might be one of them. 1099s, in most cases, you have at least one 1099 that you are supposed to be providing. And again, failure to do that could result in failure to file penalties. So it's more complicated now than it even was 2 years ago. In the past, we had basically, there still have been a lot of forms. There's a 1099G and a 1099 MISC and a 1099 interest and B, but generally businesses only needed to file 1099 MISC, which is miscellaneous income. Well, the IRS changed the rules as of the filings that began in 2021 for the 2020 tax year. And there's a new form that's called the NEC. I actually wrote about this also in your magazine, but they now have separated non-employee compensation, hence NEC, from other types of pay. So if you pay someone rent and you are supposed to issue a 1099, and you pay someone non-employee compensation, you now have two different forms that you have to file. And there's, again, most people will have at least an NEC. So if you pay an attorney, if you pay a bookkeeper, if you pay a website designer, there are certain rules. So if you pay at least $600 in the calendar year, and if they are not an entity, unless it's a lawyer, you have to give them no matter what, right? And there are some exceptions when you don't have to, but generally you say, well, corporations are not subject. Well, if they are a professional corporation as an attorney, you still have to file one for them. So, but one of the things that changed many years ago now, but a lot of people still get confused on this too, is if you pay someone by credit card, you do not issue a 1099 because the credit card processor issues what's called a 1099K. So you want to be counting checks, debits, cash, or if you've used Venmo. Now, usually they say third-party platforms you also don't include. So if you paid through PayPal, Stripe, Square, you don't. It's going to change now in 2022 because a law was just passed. I'm not sure if any of you have heard of this yet, but it used to be that you did not get a 1099 from some of those platforms unless you had $20,000 in sales. It has dropped to $600, and it's now going to require Venmo also has to issue those 1099K forms. But that will be for reporting in 2023 for the year 2022. So Venmo is not required to do a 1099. That was a personal app that people have started using for business, but it wasn't meant for business. And from a bookkeeping perspective, we don't like Venmo because you don't get much information. It makes it really hard for us to post transactions accurately. PayPal, Stripe, Square, those are much easier. But again, so if you pay by credit card or if you pay by most third-party platforms, do not issue because then they're actually being double reported. So again, if you pay someone cash, check, debit, through those methods, and it's $600 or more. And generally, if they are not a corporation, then you issue the 1099. It is due to recipients by January 31st. The 1099 NEC is also due to the IRS by January 31st. So again, failure to file on time could result in penalties.
And when you say corporation, you're meaning S Corp, and that includes LLC, and right? So
well, not all LLCs. Some LLCs are subject. So I'm glad you brought that up as well. If the LLC is basically one member, one owner, they're called members is in an LLC, they are basically taxed like a sole proprietorship, and it's
Mhm.
considered subject to reporting. So those entities that are subject to reporting: partnerships, sole proprietorships, limited liability partnerships, single member LLCs, or if they're taxed as a partnership. If the LLC is set up as a C Corp or an S Corp, then you do not have to report them. And this is why it's so important to ask for that W-9. And I always say, ask for the W-9 before you pay them their first payment, because if you wait till the end of the year or January now, like I have some people that we've given them the list of 1099s that are subject, they hadn't asked for them, they're asking for them, and they're not getting a response, right? But if you owe someone money and you say, I can't pay you until I get the W-9, you're more likely to get it. You'll have everything you need to report, and it will basically tell you the legal name, the tax ID, their address, and what type of entity are they, so you know if they're subject or not. And again, going back to when I talked about the DBA and having that, doing business as, if you report under the DBA, but that is not how they pay their taxes and it's under their individual name, you will get a mismatch form from the IRS. It says this name and this tax ID number don't match. And then you have to go back and realize, oh, we reported it under the wrong name. So when you're processing the 1099, look at the form, and where it says, their actual legal name on their tax return, that's how you need to process that 1099.
Okay, good to know. All right, awesome. A lot of information and kind of a tough subject. I mean, anything money can be a tough subject. It can be boring, but here's the thing. It's incredibly pertinent to be able to run your business successfully, to save yourself time and effort and energy and money in fees and penalties and all that, because you are not stepping into that piece and doing what actually you really need to be doing via the federal government or the local state governments that you're working with. So really, really important stuff. Candy, thank you so much for being with us. We're going to take it off of Facebook now and go into our private Zoom with all the ladies here so that they can ask personal questions. We'll be back here on Facebook at 2 p.m. Corey Matthews will be speaking. She is our next expert. She is a nutrition and fitness expert, and we'll be talking about hormones and how they affect your life. In fact, the actual talk is called "Your Hormones Are the Key to Feeling Your Best." And at 56 years old, I can vouch for that. All right, Facebook, we will see you at 2 o'clock. Okay, let me stop the recording. I hate it when I minimize the screen. I can't find the stop button. Okay, there we go. All right.